Hey guys, this is an update on the status of our crypto crash. It's been a very crazy week across all the markets, not just in cryptos. We've seen quite a pullback in equities and even a bit of a reversal today. We're seeing incredible action in metals, energy, a lot of sectors. With our latest pullback in cryptos, we looked like we were about to trend lower, but we've had a sharp bounce back today. So we're going to look into what that means for us. Is the bottom behind us? And if not, is there a bottom buying opportunity ahead of us? So stay tuned to find out. I'm going to cover Bitcoin and Ethereum just to give us a general idea of the sentiment, and then I'm going to cover some of the individual altcoins later on in the video. So stay tuned for that. I will have chapter timestamps so that you can skip ahead if you'd like to. This is our close-up chart on Bitcoin, and this is just a 15-minute chart. And you can see today that we hit a bottom right around 34,336. That was on February 24th. So basically middle of the night, early morning looks like. And well, we've had a colossal bounce. We've actually all the way up to about, 39,700. That's about how much we hit. And when you look at the shape of this thing, it's not clear what this is. It doesn't look like a corrective wave to me. As a matter of fact, it may be 3 up with the fourth wave consolidation in progress right now. This could be an ABC. I'm actually going to draw that just to visualize it. Could be something like this, A, B, and a C. There is a chance that if we get that higher high, that this turns into a 5-wave impulse, although it would be with non-standard proportions. It could look something like this, and it goes a bit higher. So there's some possibility that this thing could mark the end of our pullback. When we look a little bigger picture, we haven't made a lower low since the low that we hit earlier back in January, actually exactly a month ago to this day, around 32,940. We have a similar thing going on with Ethereum as well. But before we do that, I'm going to shift to the big picture just so you guys can look at this big picture to see some of the things I've cleared out. So that red pattern that was formerly here is no longer here. We just have our purple primary and a green alternate pattern that is holding on by a thread because we haven't made a lower low since that low that we hit on January 24th. We still do have that intact. This could be the start of a new rally. It's not clear. We may have an unconventional truncated bottom because this pullback could count as 5 waves down. So you never know. Truncated pullback means that our 5th wave didn't go as low as the 3rd wave. I'm having trouble believing that at the moment. So if things continue, we do have a downside target. And the way this pullback is shaping up, it looks like a classic diagonal, ending diagonal C wave, in which you have an A, B, C pattern for your first wave, A, B, C up for your second, A, B, C for your third, A, B, C up for your fourth. There's little Roman numerals. And if the trend continues, we have the A wave down of our 5th wave down. So what that would look like would be something like this potentially. So we have our 4th wave down like this. Maybe that was our spike down the A wave. This bounce may be the B wave, and then we may have our C wave to follow. And I've actually put a fib calculation out here, Fibonacci extension, which will tell us that well, typically you will see more than a 1.0 extension of that AB to the downside. So minimum target of 29,720. Really, it's a maximum target because we're looking at a bearish movement here, downward movement. And really, we would expect this thing to go a little bit more. Oftentimes, in ending diagonal, you have an extension and we have an overthrow. So this C wave may just spike down briefly, maybe below 24,000. It's not clear, before a colossal and sharp reversal. And that would align with our big picture pattern in which we were looking for a lower low that should have hit 24,000. We didn't get there in the summertime. Similar story in Ethereum, which I'm going to shift to right now. This is our 15-minute chart in Ethereum as well. We have the same story. We had a sharp, spiky pullback. This thing came much closer to invalidating its alternate pattern. Our low that we hit on Jan 24th was 2,156. We got very close to that. We hit about $2,300, and we've spiked up in similar fashion. Although, if you have to ask me, this looks a bit more corrective to me. This looks like it could be an A, B, C. I know I counted differently in Bitcoin, but the depth of this correction right here, this little pullback, gives that alternate view a bit more credibility that this is just a corrective bounce. And, well, we're going to see what that looks like in the big picture. So in Ethereum, similar story. Again, we didn't make a lower low, so technically our green alternate pattern did not invalidate. And, of course, we'd have to break down below the 2175, whatever I said was 2180, whatever that low was marked by the red line. I think it's a little bit lower than that, 2165, something like that. In order to invalidate, we came very closer here than in Bitcoin. And same story here, in which we have an ending diagonal C wave from this B wave top. So you could easily count 1, 2, 3, 4, and presumably we're in the 5th wave down. This, well, Ethereum's diagonal pattern doesn't look as clean. This definitely could count as a 5-wave impulse down, but the 3rd wave is more likely to look like that than any other wave. This is definitely a 3-wave pullback, the first wave of this ending diagonal. And with this colossal rally that we had that topped on February 10th, almost overlapped the bottom of the first wave, it does lend credibility to the idea that we are going to go down a bit lower. In Ethereum, same story. We may be in the A wave down of our final 5th wave bottom. And I don't know if I clarified before in previous videos, but in a diagonal pattern, especially ending diagonal, each of these subwaves takes corrective form. So you'd expect ABCs, and therefore this would be an A, B, and a C to finish off this pullback. And this does project, just like Bitcoin, to our lower targets. Maximum target 1930. It could go lower. I would expect this fully to go into that 1700 neighborhood. So that is what we got for Ethereum. when it comes to buying these dips, things get interesting. There's different philosophies. What I'll be doing is I'm going to be buying in 2 tranches. I've mentioned before that I kind of didn't follow my own advice. I typically buy a tranche in the third wave down, which would have been on January 24th. I actually did that for equities. I bought a 1/3 tranche in some ETFs such as VOO, SPXL, a couple of leverage ETFs. I didn't do that in cryptos, unfortunately. And really, I think the market was moving too fast. Maybe I overanalyzed, but typically you want to buy a bit of something then, whatever your tranche is, because there's no guarantee of a lower low. And oftentimes the lower low doesn't go too much lower than the third wave. I could go on and on, miss that opportunity, not a big deal. We may get that lower low after all. So after this bounce, I do expect one final lower low. And you may be wondering, do I go all in? Am I going to put 100% in right when Bitcoin gets to 24,000? Well, that's a matter of if, actually, because still there's no guarantee we get down there. There's also no guarantee that this whole thing falls apart. Just because we have Elliott wave patterns that are very strong and robust doesn't mean that they're guaranteed. This is the even longer term picture. And you never know. There are multiple interpretations for what this rally could be. Maybe this was a ABC up. You never know. Maybe this was the 5th wave top up here. Ultimate top could be an expanded flat. So there's no guarantee in investing. And remember, this is a risk asset. There's a reason why they call stocks and cryptos at this point risk assets, because there's always a risk. You never know if the thing falls through and absolutely invalidates everything. However, I do strongly believe we'll have early warning of that. And that goes for altcoins too. Typically, you see an early warning in Bitcoin and Ethereum. If your altcoins are going to go down the tubes, you're probably going to see an indication of that in Bitcoin and Ethereum first. So I would expect to buy half a tranche there, and then I would expect a 5-wave impulse up to make my my next purchase. So imagine this goes down here. Maybe we have a 5-wave impulse up. I don't have the calculations off the top of my head right now. We get 5 waves up, and then I would be looking for a 3-wave correction back down, which would give us our 1-2 setup. That is what we look for in Elliott wave theory, something like that. Zoom up just a bit more so you guys can see that. You'd expect a 5-wave impulse up and a 3-wave correction down. And you confirm the bottom once you get through the top of that, usually a 0.6 wave extension, what we call a pivot. So we'll be looking for that. And like I said, half a tranche there, 50%. I'm not sure I would wait all the way for this to buy the other 50%. Maybe I buy some on the way up. I got to think through my strategy. I also have my allocations that I'm going through. If you haven't noticed yet, I have put out a video on a new on an index, the crypto risk reward index score. And it's a system which helps you determine which cryptos are have the highest upside versus which ones have the most risk. So I will be following that along. There may be some cryptos that I buy at the very bottom, 100%, whereas other ones I may only buy half my tranche down there. There may be some that I don't buy down there yet. Maybe I wait for a bigger setup just because of the risk. What about the state of the altcoins right now? Well, I'm going to start off with Bitcoin Cash, which has had quite a pullback too, but we haven't had a lower low. We actually bounced right off the low that we hit on January 24th. So we have still not gotten in this blue box, and you can see I have the BTFD zone marked on there. See what happens. Got to be careful what we wish for. You don't want to pull back too hard, but it would look better with a lower low. Ethereum Classic is in the same boat as well, in which we didn't really get a lower low. I don't have a buy box displayed here, but I may in my actual chart for Ethereum Classic. Here we are. So yeah, we didn't make it to the buy box yet for that one. So we got some downside potential there. Here's all the cryptos that have made lower lows. So you can see on Litecoin, I'm going to zoom up a little bit, get that red candle spiking down through our low. So we do have a lower low that exceeded the low that we hit on January 24th for Litecoin. Dash, same story. You can see we had a spike down low, and its rebound hasn't looked as impressive as a lot of these other cryptos. You can see, well, you don't see much very impressive green numbers anymore. Polkadot has you can see that green candle spiking low. It had a lower low as well. Chainlink, same thing, hit a lower low, but didn't hit the box. Solana, same thing, lower low, didn't hit the box. Stellar Lumens, same thing here. You can clearly see a green spike down. And the last one in this category would be Polygon. And this one, of course, was a bit more ambiguous. I don't know if we're going to go all the way down to the buy box or not, but we actually did get that lower low, but I'm not convinced that this is a complete pullback yet. And then finally, you have your last category of cryptos. We have 3 that actually did already get in their buy boxes. The first of which is Doge. And well, I have this lavender, violet, whatever colored buy box, and that is one of the places it could end. I would like to see this thing get down to 7.6 cents if possible. That would be nice. Give us a more confident buying opportunity. You got EOS, which, well, this is the one that was scaring us the most. We got that black hole at the bottom. We cannot invalidate 128. If we break that, the whole rally may be defusing itself. Believe it or not, the ideal pullback target is actually 128. So you may have a double bottom, which in a vacuum would be a very bad sign. It'd be very ambiguous, but because of the overall bullish setups, I don't see that as a risk. If we do get close to this red line, we definitely fill in the buy box. If you're looking to buy a dip, this is a good one you could buy. We may or may not get a lower low. However, because of that black hole below, it is a high risk crypto for sure, even though it's got incredible upside. Last one I'm going to look at is Shiba Inu. And actually, I can use a daily chart now because we have a bit more history. This has a very unconventional pullback. It could be an expanding diagonal. It's not something I would expect. Got a 1, 2, 3, 4, 5. Potentially a 5, we don't have it yet. Or this purple wave 2, wave C, whatever, this could be the bottom. So SHIB is following its own pattern. It's marching to its own drumbeat. I'm going to zoom up just a bit just to get a better look at this thing. If you look at this rally, I don't see any way for this to be counted as 5 up, but you never know. This might be part of a diagonal, something like that. If we get into that green box, that could be a good sign that SHIB is done cratering. Otherwise, I fully expect a spike down all the way down to, what was that, 0.000011, something like that. Be a long way down from here, potentially 50% downside for SHIB. So not to scare anyone, that's what's going on with the crypto world. I'll be making lots of updates as we approach the buy regions, and I'll be highlighting what I'm doing with my own crypto purchasing. And I'll be making lots of references to that new risk-reward crypto score index. It lets you compare the upside versus the risk downside in various cryptos. So don't forget to subscribe that we don't miss those. If you like my video, give me a like. Until next time, thanks for watching and happy trading.